So we're just going to go over the webinar structure. As you know, we have a couple more people that we are expecting. Everyone is actually going to be muted until the end of the webinar. You can expect about 15 to 20 minutes of content. However, we will have a Q&A at the end. And again, we just want to say thank you for everybody for joining today. We do appreciate and value your time, know that you are busy. So just being here puts you ahead of a lot of people because again, we have a bunch of people that always sign up, but you know, some of them actually don't attend. But again, by you being here, in the short amount of time that we're going to have with you, we are going to jam pack it with the years of experience we have. Aaron being the mortgage agent, I the real estate agent. I'm going to pack that into this session to put you ahead of 90% of people and even people in our own industry. Okay, so thank you again for joining. Pat yourselves on the back, especially if you're not here, if you're here with your family or someone else, and feel free to actually share the link with people that you think may actually benefit from the session. Okay, so we'll get into the first slide. Okay, so as you sit at home, right, behind your computer screen, right, thinking about the home buying process, how do you feel, right? Because home buying isn't, you know, a little purchase. It's like purchasing a car, right? It's not a couple thousands of dollars, right? It's actually hundreds of thousands of dollars, right? So it's not something small, right? You may be feeling concerned, right? If you've been following the market, right? You're concerned prices maybe you've seen have gone down, right? Are they going to keep going down, right? Are you stressed out? Is this leaving you unable to sleep, right? Aside from life's other stresses, okay? Are you intimidated because maybe you haven't met the right sales person or person to help advise you as to this big decision, right? Are you anxious or are you uncertain? Because again, in today's economy, there are a lot of things happening in the world, right? There are earthquakes even while you're sleeping that you don't know about. And, you know, buying a house is another really big decision. So chances are, if you're feeling any of these emotions, 10 other people are as well, right? Because again, it's a big decision. And hopefully being at this webinar today, we can lower that and help you be more informed and confident when purchasing a home, okay? So we're gonna get into the slides. So you know that we are active in the industry. Here's some feedback. Okay, this person has 180 reviews, some more. And there's another one, okay, about Aaron. All right, and again, so we're not just people behind the computer screen. My name's Adrian Lopez Williams. Number one, I'm a father. I have a son at home. He's turning 4 this year, and he's the reason why, you know, I work so hard, but I also am very passionate about what I do. So I studied at the University of Toronto with a bachelor's degree in exceptionality in human learning and a minor's in educational study to become a speech language pathologist. But I did find my passion working in real estate. I did actually help one of my parents buy their first homes, which was one of their dreams, which actually, you know, helped me turn that into a dream myself. So I transferred, you know, my working hard school into business and real estate. And again, the last point is I love helping first-time home buyers as a buyer's agent because there are obviously a lot of inventory on the market. Doesn't meet the demand, but again, there's always a deal, I believe, to be found in every industry, whether that be buying a car at the grocery stores, but definitely in real estate to help you save money, okay? And my partner.
Hi, everyone. My name is Aaron Collins. I am a mortgage agent with Dominion Lending Centers. That is Canada's largest mortgage company. And something about me is that I am a real estate investor myself, as well as a first-time home buyer specialist. The whole reason why I got into the mortgage industry was because I was a first-time home buyer myself, and I made a lot of the mistakes that we're going to talk about in this webinar today. And I want my job to be to help make the mortgage process simple and easy to understand and guide you through the mortgage process and make it a lot more comfortable. Another thing about me is I am also a huge Toronto Raptors fan. So if you ever want to talk about mortgages or NBA basketball, feel free to book some time with me. I'll be happy to do that. Now back to Adrian.
Awesome. So what are the steps to home ownership? Okay, there are only 3. Okay, so there's not many, but within those 3 steps, there's a lot of room for error and opportunity for you to actually lose money, right? If you make these mistakes. So number 1 out of the 3 steps is being here today. Again, we're gonna give all of our years of experience in this short session. So once you have that, you can be able to be confident, right? Step number 2 is actually getting a pre-approval with your mortgage broker. Okay, now hopefully that can be Aaron, that you know, like, and trust him. But one thing that I actually want to point out is that a lot of people actually skip step number 2 and they go directly to step number 3, which is to house hunt with your realtor. Okay, so again, you want to actually get your numbers in order first, right? To see if you qualify for certain incentives being a first-time home buyer. Okay, and then you're going to get approved, right? In red, right? That's Aaron's Calendly link. For those of you who are serious, and you know his schedule does get packed really soon. So if you want, you can actually book in that right now for a future time, just so you can save your time. Okay, and number 3 is the house hunt with your realtor. All right, so that's going to be, you know, letting me know, you know, if you'd rather have cement on your driveway rather than asphalt, because perhaps it actually makes you look more wealthy, or maybe you don't want to be able to high-five your neighbor from your kitchen window, right? Whatever it is in your criteria, let me know. Okay, we'll find that home. We'll act like your money is my money, right? We'll negotiate, get your offer accepted, okay? And then have a home inspection if you're purchasing a home, or a condo status certificate review, okay? After that, we're going to waive any other financing conditions, if any, okay? Let Aaron know, and then that way we're gonna finalize the financing, and then a week prior to closing, you're gonna go to your lawyer's office, sign the paperwork, they'll let you know where funds are going to be transferred on the day of closing. And on the day of closing, Aaron and myself are going to congratulate you as Ontario's newest first-time home buyer. Okay, so that's it in a nutshell. There are only 3 steps. For some of you guys may actually be looking to purchase a home in a year, maybe 5 years, some people in a week or 2 months. Whatever the case is, we're going to help you walk you through those steps today. And we're going to go with number 1. If you guys are ready for mistake number 1.
Thank you, Adrian. Appreciate it. Now let's get into mistake number 1, and that is ignoring the first-time home buyer incentives. You're not going to want to miss this. So something I find that people do is not realize they can actually use their RSPs towards their down payment. In fact, you can use up to $35,000 per borrower. So if it's you and someone else, that's $70,000. So if you have RSP accounts that you've been contributing to throughout the years, guess what? That's not money that is locked away until after retirement. You can actually use it for your down payment. And here's another thing to consider. It will help you grow your down payment and make your money work for you. So what happens when you contribute to your RSPs? You lower your taxable income, and hopefully you get a potential tax return. So that's actually a way for you to utilize your money to grow your down payment. Let's say you have $35,000, right? And you just put it into your savings account. That's just $35,000 in your savings account. However, let's say you take that $35,000 and put it into your RSPs. So that's the $35,000 you would have had anyway, plus whatever refund you receive from contributing to your RSPs. So make sure you talk to your accountant to see if this is something that would be beneficial for you, because everyone is different. Also, just keep in mind, you will have to pay this back within 15 years. Now, another great incentive that we have here is the land transfer tax rebate for first-time home buyers. So what is land transfer tax? It's essentially a tax that you have to pay when you purchase a property, and the actual amount is based on the purchase price. Now, these are part of closing costs. Now, when you purchase a property, it's not just a down payment. You have to wrap up the transaction, like lawyer fees, appraisals, and the land transfer tax, which makes up a huge part of your closing costs. So you always want to have a little bit more money for that. But here's where you save money, being a first-time home buyer. Let's say we focus on the example down below. You buy a place in Mississauga for $500,000. You would have to pay nearly $6,500 in land transfer tax. However, with the rebate, you save up to $4,000, and now that gets cut down to about $2,500. Something to also keep in mind that some municipalities like Toronto, they actually have higher land transfer tax. Now, if you look at the other example down below, you're going to see that if you purchase the same $500,000 property in Toronto, you will actually have to pay about $13,000 in the land transfer tax. However, being a first-time home buyer, you get those rebates, and now that reduces down to about $4,500. So you can really see the savings there, and this is a great incentive when you're a first-time home buyer. Remember to talk to your lawyer. And if you get confused about these numbers, feel free to download my app. It's My Mortgage Toolbox. It's a great tool. You can calculate the land transfer tax as well as other closing costs. You can pre-qualify yourself and stay up to date with the current rates, all at your fingertips of your hand. So again, whether it's Android or Apple, the link's in the chat. Feel free to download my app, and happy number crunching. Now let's move on to the second mistake, and that is not getting a pre-approval. This is an absolutely crucial step when it comes to the home buying process, because you want to make sure that you do this before you even set foot into a home and go to showings. Because what you want to do is make sure you fall in love with the price before you fall in love with the home. And make sure that you know your absolute limits to maximize your home buying process and make it a lot easier and more efficient for yourself. So what actually goes into a mortgage approval? Well, there's three pillars. There's your credit. You want to look at this like your resume for how well you pay people back. If I'm a lender willing to give you a couple $100,000 in a mortgage, I'm going to want to make sure you have a good credit score and you manage debt well. Then there is pillar number 2, and that is income. A lender wants to see, is your income sustainable? Is it reasonable? Can you qualify and deal with the cost of home ownership? And then there's step number 3, and that is a down payment, where we want to see, do you have skin in the game? Is this coming from your savings? Maybe you're getting a gift from a family member, things like that. So you want to make sure that you tick off these 3 boxes and you verify all these things when you get a pre-approval to make sure that there's no surprises. Because I will tell you something, there's a difference between an underwritten pre-approval and a rate hold. So when a lot of people hear pre-approval, they just kind of see a piece of paper with a rate on it and their budget, right? Those can be printed off at any time. However, if you look to the right and you see a rate hold, all you're doing is holding an interest rate. An underwritten pre-approval, that's what you want. That's where we do a full review of your income, credit, and down payment to make sure that there's no surprises. And when you actually do all the homework up front, it makes sure that you are able to go out confidently for a home, as well as make sure that you hold an interest rate as well. So always do an underwritten pre-approval, documents up front, because that will make the home search a lot more enjoyable and less stressful. Because when it comes down to it, the savings with the pre-approval is that you save time, you save yourself a headache, and it's ultimately priceless. Now, mistake number 3 is using your bank. Now, with that being said, this is actually a mistake I did when I bought my first property years ago. And you know what? It makes sense. I went to the bank that I went to my entire life. However, it actually wasn't the best thing, because when you go to a bank, you're only limited to what they have to offer. A mortgage agent such as myself, I actually work with a lot of the banks you're familiar with, like TD and Scotia, as well as credit unions and trust companies and some other lenders you don't know about, to get you the best mortgage and interest rate for your unique needs. So after I get to know you, instead of trying to fit you in a box, I find a box that fits you. Because something I really want to stress is the mortgage product is more important than the interest rate. Believe it or not, mortgages are more personal than you think. It's not just sign up for the rate and call it a day, because the interest rate is an indicator of what you'll pay, but it's not the true cost of a mortgage. Now, this is what I mean by that. Check out these articles. TD Bank charges $30,000 mortgage penalty to woman forced to sell home due to pandemic. TD Bank client devastated by $17,000 mortgage penalty. You don't want to be this person. Now, with that being said, a lot of times when I ask people, do you feel like you're going to break your mortgage? It feels like 9 out of 10 people say, of course not. I'm going to stay in this property forever. I'm going to stay with this mortgage. However, the reality is 2 out of 3 mortgages get broken in year 4 or 5. And that could be for a lot of different reasons. Maybe you're moving to a different province. Maybe even with all the interest rates going on, you want to break your mortgage so you can refinance into a lower rate. There's so many different reasons to break a mortgage that you want to make sure that when you're choosing your mortgage now, you are prepared and understand what you're signing up for. Because at the end of the day, bank penalties are expensive. It could be the greater of 3 months interest, which is common with a variable rate mortgage, or the interest rate differential, which is common with a fixed mortgage. Now, when it comes to the fixed mortgages and the interest rate differential, that's where I want to introduce you to monoline lenders, because how they calculate the interest rate differential is significantly different compared to the banks. Now, what is a monoline lender? That's actually a non-bank lender. Now, don't be scared of these lenders, because they do mortgages only, and they have billions of dollars of mortgages under administration. You get the same rates with way more client-friendly products. A couple examples of these lenders are First National Bank, MCAP, and CMLS. These are lenders that, quite frankly, because they need to compete with these banks that have a big market share, they have to have superior products that are more client-friendly. So it's always a good idea to talk to a mortgage agent such as myself, because I have access to these lenders and I could see if they're the best fit for you. Here's an example of a penalty on a $400,000 mortgages. Now, if you look to the left, you'll see that to break the mortgage, it'll be about $3,000. And to the right with the same mortgage, it will be about $14,500. That is almost an $11,500 difference just because you went to a different lender. How would that make you feel to know you could have avoided this huge penalty? And this is what I mean by sometimes it's really the true cost of a mortgage. It's not just the interest rate. Now, we'll move on to mistake number 4, and that is buying directly from the builder. So I'll let Adrian take over because he's the specialist here.
All right, guys. Hello. Let's talk back to the real estate market. Thank you for staying so far. Okay, not too much to go from here. So buying directly from a builder, right? So perhaps early last year, right, when a lot of people were actually getting into the pre-construction market. So again, these are homes that are not built. They're going to be brand new with your finishes that you choose, right? So sometimes on the side of the roads, you see presentation centers for new projects that are going on in the area if you're just driving by. So you may actually decide, okay, let me go test it out and see what's there. Let me go drive there myself, okay? Essentially, you're going to be meeting with the builders, sales representatives there who are selling only that project, right? So again, you have to remember that they work for the builder, okay? Some people actually don't know, again, if you're a first-time home buyer, that you can actually use an agent such as myself who works with all builders. Again, I'm actually working with Bay Street Group. So we have one of the top access in pre-construction. So a lot of agents, about 50,000, do come to us for the access in pre-construction. So we work and have a special relationship with all builders. They do give our clients a lot of incentives, such as first round VIP pricing. And again, which we'll talk about, again, if you go directly to a builder, you won't get that access. Perhaps that can be, a free parking space or locker, $5,000 to $15,000 in savings if you work with someone such as myself, and those discounts are already calculated into the purchase price. So whether you use myself or another agent, you're still actually getting the same price, okay? Or sorry, you're not getting the same price, or sorry, the commissions is already calculated, so you're still purchasing at the same price if you use an agent or not, okay? So again, using someone such as myself, you'll have the confidence to know that, we go around to many different projects. We therefore know if there's going to be, an obstructed view in your, the property that you're picking, right, in a condo. For example, the sales agent might be telling you you're getting a discount on one of these properties, but again, they forget to fill you in on that detail that there's actually going to be a fire hydrant on your lawn, right? Again, I do this full time, so I'd be there with you, guiding you, letting you know which upgrades that you choose make sense, because again, some of them go out of style. They actually don't make sense for you to spend the money because there's no return there, right? So wouldn't you also like to know if, there was a building built perhaps 1 or 2 years within the same time, and that it's actually, cheaper than the current project that you're looking at, right? Just that alone, you can save hundreds of thousands of dollars, right? But if you go directly to the builder, again, they don't have your best interest at hand. So they won't tell you these things. Okay, they're only selling that product, as Aaron was saying. Rather, you should shop at a shopping mall where we have access to all the projects and can let you know to help you make an informed decision, okay? And going to the next slide, right, we can see, this person, actually could have used an agent, but this is pretty recent. There are other articles, but this one was actually in Brampton just last year in 2022. So these people here, it's a project development. It was for freehold townhomes. And they basically, because the properties were over $1 million, right? They had to put their deposit about 20%, which is usually what it is in pre-construction. So about $200,000 to sometimes even $300,000 in this case, okay, on their deposit. And because the builder did not actually have their building license in the right standing in Ontario with their requirements, they couldn't build. There was a lawsuit against them. And a lot of these people who purchased, right, some of them lost their pensions, all of their life savings, because they were working with an inexperienced developer in pre-construction. Okay, so it's really important knowing the market. You guys know that interest rates have gone up, right? And we can talk about the market and the trends kind of in the Q&A, but interest rates have gone up a lot from a historic low, about 1 to 2%, where a lot of people perhaps were over leveraging if they didn't know the right advisors to help them, right? And some of these people, again, they've lost their pensions or life savings. And it's not just these types of people. You know, I know a couple clients, right, who, you know, came to me after everything in the hype of the pandemic, and now are calling me to this day, telling me, Adrian, what do I do now, right? Like, should I sell? I can't keep up with the payments, rates keep going up. Okay, so it's very important nowadays to know about the economy, not over leverage, and to work with a professional that you can trust who does it full time, like Aaron and myself, so you don't run into this small mistake, which just can happen to be walking into a sales office off of the road and not knowing, you know, what you can have access to, which is a realtor. And that can cost you your deposit over hundreds of thousands of dollars, or in this case, $5,000 to $40,000. Okay. So mistake number 5 is skipping a home inspection. Okay. So if, again, you're purchasing in this type of a market, we actually are able to do a home inspection, whereas in last year's market, while rates were low, there were, you know, 20 offers on homes, and people were just lining up and purchasing homes without any conditions, right? You hear the term clean offer, right? So they were basically going to the home without a home inspection that costs about $350 to about $500, right? Where you have a qualified home inspector come into the property, right? They see, because I don't have x-ray vision, maybe Sherlock Holmes does in the movie, but I can't see, you know, in the washroom behind the grout if there's moisture, right, in the attic or in the basement, right? So if you don't use a home inspector, right, you run the risk of, you know, there being major issues with the property. And again, it makes sense in this market to use a home inspection clause and to have a home inspector come in, because then again, you get a deficiency list, which is very important, a deficiency list of the home. And basically from there, you can we can negotiate on the offer to have, you know, these things fixed before you actually move into your new beautiful home, or to actually have the price reduced, and therefore, you know, you can fix those things upon the move in. Okay. So again, if there's too many things that you find are wrong in the home inspection, we can use it as like a form of protection, insurance, to basically walk away from the deal, okay, as opposed to not having that option at all, because perhaps you weren't working with a qualified person who's inexperienced and who advised you correctly. And again, in this type of a market, even if it's competitive on a very good property, working with an experienced agent, again, such as myself, if you cannot have a home inspection in the offer, there's a way that I actually know to actually carry out that home inspection and have the offer and the deal still go through, okay? And mistake number 6, this is actually one of the last ones, it is the last one, is skipping the condo document review, aka the status certificate, if you're looking to purchase a condo property owned by a run by a corporation, right? So basically, a condo document form, the status certificate, basically is the financials of the building. Okay, so it basically tells you if there are any litigations or lawsuits against the condo. Okay, if the current owner of the unit has kept up with payments, right? They paid their maintenance, any fees to the condo. They want to make sure that the new owner has a clean slate, doesn't have to pay anything. You want to make sure that there's no special assessments that they may be actually knocking down or building a new parking lot, right? Maybe all the owners have to replace the windows in their units, and maybe that might cost the new owner or thousands of dollars, where you have to maybe get a loan to pay it, or you just don't want something unexpected to show up. For example, you cannot bring your lovely pet dog or cat to the building because they don't allow it, right? These are the things that are going to be in the condo status certificate review. It's about, like that thick. So your lawyer actually has to review it and, make sure that we waive this condition. And again, you're not really doing an inspection on the condo because it's maintained by the corporation, but for sure, you want to make sure that you review the status certificate because there are stories, and I believe Aaron has one, where even I have one where I put an offer with my client. The offer was accepted, and within 5 days, we were able to review the status certificate and actually catch by the lawyer that the building was actually using the money of the property owners, right, from the maintenance fees, and illegally using it to pay phone bills and just things that are illegal. So you definitely don't want to be purchasing a property in such a place, right? So again, working with an experienced agent can definitely help you save some money, about $10,000, right? And again, it can be even more. Okay, so I believe Aaron does have an example. Okay.
Yeah, so I actually have an example of dealing with just this. This was in the height of the frenzy where offers were getting accepted and you were getting like 50 offers on a house, where this amazing couple with great credit, income, and down payment were successful on a condo townhouse. I submitted the file and then it came back to me and I wondered, what's the deal? These are AAA clients. Turns out when I took a look at the status certificate, when I got my hands on it afterwards, we realized that the condo property management were mismanaging the funds. They had lawsuits and lenders didn't like the property, because sometimes the lenders, they could love you, but that doesn't mean they love the property. So after we found that out, I had a tough conversation with my clients who fell in love with this property. I told them this is the reality, that there might be a special assessment, right? And we ultimately were able to back out of the deal. And then they were able to find a much better home later on. So this is why you should not skip the status certificate review, because there could be problems with the property management and that are no fault of your own. However, you end up paying for it. So we're going to move on to the next slide now. Something I also wanted to touch on was new to Canada, right? So the amazing thing about Canada is we have a lot of immigration. So it's very common that someone might be here in our webinar today who's a permanent resident, maybe applying for a permanent resident or on a work visa, or even an international student. And they always ask me, can I purchase a home? And I want to tell you, yes, you can. You can still purchase a home with as little as 5% down, and you still have access to the best rates. You just need to have a valid work permit or permanent residency. And then, similar to if you were a Canadian citizen, you still go through the standard employment and income verification. That's like getting things like job letters, pay stubs, bank statements, and also a credit review. Now, with that being said, because you might not have been in Canada or North America, you might not have a long credit history, which is why there are alternate ways to prove that you have integrity and credibility when it comes to paying people back. You could get an international credit report through Equifax or TransUnion. And if that's not available, we could then look towards alternate sources of not necessarily credit, but demonstrating that you can pay people back. That is an example like your telephone bills, your utility, your auto insurance. If you have a great track record of paying your bills, this could be used to help prove your credit worthiness. Another example of what we can use is a letter of reference from a recognized financial institution or 6 months of bank statements from the primary account. So even if you're new to Canada and you might not have that credit history compared to someone who's been here for 5 to 10 years or even their whole life, there's alternate ways to make sure that you can still be qualified and still purchase a home. And remember, you still have access to the best rates.
All right, guys. So that's it for the webinar. How do you feel, right? We asked this question in the beginning, right? Are you guys feeling better? Type it in the chat. We hope you guys feel better. Hopefully we did answer a lot of your questions. I know that being new to Canada or getting into the market for the first time, we all have a whole bunch of questions. We don't know who to trust, like a bunch of answers that we don't know if they're right or if they're up to date. But if you have any questions, let us know, as we can definitely help answer that. Now we can go over the market and again, help you and the home buying process be a good one, a fun one. Because I know, in 2023, compared to last year, a lot of people are feeling burnt out. Again, they're uncertain, the economy, there's